Inflation is a very serious subject. You can argue it's the way democracies die.
Inflation stubbornly above 8%. The Dow ending this week below 30,000.
But then Ukraine comes on, shutting down the breadbasket of the world that produces enough food to feed 400 million people.
Already struggling to pay the bills.
Does it feel like that's in charge sometimes?
Yeah, that takes everything, every bit of money.
Home sales and prices are down. A property investment also declining. In fact, Citi says nearly a third of all property loans are now classed as bad debt.
The sheer scale of the issues we're facing globally is not only already quite concerning, it's mounting, it's growing, and there are more and more problems rising every day. And no, this is not some kind of fear-mongering thing. This is real, this is happening now, and it's going to get worse most likely. A lot of people in the US seem to think that all of these ideas are like fear-mongering ideas. And that's only because you and I are fortunate enough to not have to experience a lot of the effects that are taking place right now. Though I think slowly but surely we will start to feel the effects here at home too. And I was reading this report from Credit Zeus, Swiss, however you say it, and this is a really good report about war and interest rates. It's a long report, so we can't read the whole thing, but you can go ahead and take a look at this yourself. They were saying that, the US has weaponized the US dollar and that Russia has weaponized commodity. Welcome to the war economy. Guys, we are going through not just a war in Ukraine, this is economic warfare. And in this report, they were saying that it's time to think more about the risk of inflation staying higher for longer due to economic warfare, and less about inflation being driven by a messy reopening process after the pandemic and some sort of stimulus problem. Guys, this isn't turning into something completely different. What it once was is not what it is now. And what we've seen historically from the Paul Volcker era is that, inflation expectations sort of actually, feed on itself. When people expect high inflation, it sort of becomes a self-fulfilling prophecy. When people expect a recession, it becomes a self-fulfilling prophecy. And in this report, they were saying inflation expectations are well anchored when nobody talks about inflation. But everyone is talking about inflation right now. So it's the opposite. They are not well anchored. Inflation expectations go thrown out the window, and it's very unpredictable. So doubt in this report on the next page here says, Paul Volcker is no doubt responsible for the deep recession of the early 1980s, but we shouldn't assume that rate hikes and recession are all that are needed to weed out inflation from the system. Recessions can help, but may not be enough, especially if Ray Dalio and Larry Fink are right, and we are headed for stagflation, an environment where inflation is persistent. And what we heard from Powell recently is that, the interest rate hikes is likely going to put a lot of pressure on businesses and households. A lot of pain, he said, coming from Jerome Powell's mouth himself. A lot of pain, a lot of pressure. And if we are headed for stagflation with persistent inflation, but we have these interest rates being sustained at high levels, we're going to have slowed growth with persistent inflation, not a very good situation. And it seems like a recession is quite needed right now. A continued recession is needed to really tame inflation, guys. And what's really interesting is that in this report, they said the 7 fat years followed by 7 lean years type of thing from the old, biblical text. And we are in the Shemitah year. We are in the Great Shaking, the period of the Great Shaking, the Sabbath year, where historically things do take a turn for the worst. And interesting timing, right? And they're also saying in this report, make no mistake, the risk of the Fed hiking to 5% or 6% is very real, despite economic and asset price pain. And they're asking some pretty interesting questions in this report. They're saying, is Jerome Powell a dark horse who's more political than serious about inflation? Well, they don't seem to think so. They think that once you, pull out the Paul Volcker playbook, that essentially Powell would rather fix inflation with a depression than not fix it at all. So they think Powell is very serious about fixing inflation here, and that a deep recession in damaging the Fed's reputation as an institution, a deep recession is the lesser of two evils. The lesser of two evils, that it is more likely that they would allow the economy to go into a deep recession, and at the extreme, a depression, in order to get things under control. And that's actually the lesser of the two evils here. So this is a great report. I definitely would recommend you guys reading it. Not only this one, but also this one from Bridgewater. We talked about equity markets are not pricing in the next stage of the tightening cycle. We talked about this already, how the S&P, the stock market, has priced in the interest rate hikes, right? That's kind of what we're seeing here. But what the market has not priced in is an earnings recession. And we talked about this as well, that basically, everyone was just looking at the Fed and what the Fed said about interest rates, but they did not consider the fact that the Fed is saying and is willing to create a recession to tame inflation, to get price stability, and they have not priced in an earnings recession. And right now, earnings have not seen a major pullback yet. Looking at this chart, the yellow line is the EPS value, earnings per share value, where in every major recession, we get an earnings reduction. And we haven't gotten it yet. Look at the top right. We're just at the top. So there's a whole nother stage coming to this tightening cycle that the markets have not priced in, which is why I'm still very skeptical about, people calling the bottom and saying we're good to go. Guys, the federal funds rate is now coming off of, near zero rates and is actually coming up. The trend is shifting back up. So we're going from an environment with lower highs on interest rates since the 80s to an area of actually now higher highs at 3.25%. We have a shift taking place, a macro shift. Higher interest rates, inflation not under control, inflation highest levels since 1983, and the market just isn't ready for what's coming. How could the market have priced all of this in? How could the market have known all of these factors? War, inflation, rising interest rates, global food shortages, energy crisis, real estate crisis in China, and now likely coming to the US. I mean, it's just so much stuff taking place that was not thought of before. And here's something I haven't even mentioned yet. Look at this chart from Markets and Mayhem. He's saying that the housing market is going to be absolutely obliterated. Very few can afford to buy as the rates are up this high, guys. I mean, we are now seeing higher than 1979 or 1980s US 30-year mortgage rates. This is so mind-blowing. Just the sheer scale of what's happening here globally. And like the Credit Zeus report said, the US has weaponized the dollar, and Russia has weaponized commodities, and it's just this economic warfare taking place, lots of clashing across the board. And if we look at the US dollar index, I mean, it's crazy to see how popular cash is right now and how much demand there is for the US dollar. And this is the real interesting thing about Bitcoin. Now we're going to go to Bitcoin, the stock market. So the stock market obviously testing near the November 2020 lows. I don't want to be the guy that's trying to predict the near-term price action. Is the stock market just going to break right down, go down faster, further? Are we going to rally up to the macro trend line before coming down? Is this the bottom? And the stock market bottoms here and we're just good to go, regardless of the fact that interest rates are going up, liquidity is expensive. We're not doing this quantitative easing. We're tightening. We're on the edge of an earnings recession. Some people are just not looking at this stuff. A lot of people in crypto have tunnel vision and they just look at Bitcoin and they just look at the previous cycles and they just go, oh, it happened here, it happened here. They're not looking at the macro shift that's taking place globally. And, I of course can't say that, I can't say the markets can't bottom here. I can't say that, oh, this is not the bottom for the S&P. I mean, I don't really know, I'm not totally sure. I just think it's likely that whether we bounce here or not, we go lower later. That we see continued contractions in the market, continued, turbulence, all these factors that we're talking about. Could we bounce here? Sure, we could, but I don't think this correction has ended just yet. And Bitcoin is highly correlated to the stock market. A lot of people today are talking about how Bitcoin is holding up against the stock market dump. Oh, look, Bitcoin's holding. And I thought that too. And then I thought about it. Is it really holding right now? Is Bitcoin really holding up against the stock market? Let me look at this weekly chart for Bitcoin. Okay, so Bitcoin had the run up and it's pulled back to November 2020 price action. Look, double bottom, November 2020 is the levels we're back to. All right, let's look at the S&P. Goes up, pulls back, double bottom. Oh, what do you know? It's back to November 2020 prices. The setup is literally the same. It is so correlated that people don't even realize it. Bitcoin was just settling up at the same place at the stock market. They're both in the same exact position. There's no difference here. You know, there's just less speculation taking place for Bitcoin, which is why the rebound wasn't as big as the stock market rebound, which is why the dump wasn't as big as the stock market dump. There's just less speculation for Bitcoin currently. So it's sitting in a tight range, but it's in the exact same position as the stock market. It's just following it to a T. And everyone seems to be blinded about, you know, the percentage difference on an intraday level. Guys, just look at the setup. Just look at the structure. It's the same. They're just sitting in the same spot. So, you know, Bitcoin's just going to follow the stock market. So the real key here is that in a bear market, Bitcoin's highly correlated to the stock market. In a bull market, Bitcoin can be less correlated to the stock market, right? And so the question is, when is the S&P going to bottom? You know, is this the low? Whatever. We are seeing a little bit of a bounce here today now for the stock market. And I suppose it's possible that the S&P rallies off of this very, very critical June low level. I'm just skeptical that it would be the real low, and we would probably come down lower later. I could be wrong about that. Of course, anything can change. You know, what is possible, you know, if the stock market does bounce here, I know you guys are going to say, wow, Kevin, you're doomsdaying it and you're saying it's over. Well, guys, if we bounce here, Bitcoin could have, you know, some sort of tremendous rally up to the macro trend line. I'm not discounting that fact at all. And I'm also not saying that these are bad levels to buy Bitcoin. These are fantastic accumulation levels. If you're accumulating Bitcoin here long term, I think you're going to do fantastic, right? I'm not, you know, some kind of just blind wild doomer. These are great areas to buy. We're just looking at the risks, guys, because it doesn't seem like the global situation has settled yet or even fully played out yet, right? So, yeah, of course, if the stock market rallies from this low, Bitcoin can test up to the downward sloping macro trend line. And then it would be very much in line with the stock market at that point. They're in the same position. Now the stock market is at the low, the June lows, really far away from the macro trend line. Bitcoin at the June lows, very far away from the macro trend line. Now they're just sitting in the same position. So I find that to be pretty interesting. My skepticism is just, okay, yeah, like we could bounce, but I don't know if we're going to be able to break above this macro trend line for, you know, a sustained period of time until we really get the stock market to settle down and stabilize. Because right now it's just down only at the moment. So I remain skeptical. But I'm not going to sit here and act like I know the future. I'm not going to sit here and try to tell you what's going to happen next because I don't know. And if you think you know, well, then you don't. There's two types of analysts in this world. Those that don't know and those that don't know that they don't know. That was something that CTO LARSSON said in yesterday's video. I had a collab with him on his channel, actually, right here. I urge you guys to watch this very cool hour-long, lots of topics covered. So if you guys want like a full breakdown, full explanation of everything, it's an hour long. You'll get all the content you want. Check this out, Svenson LARSSON Live. This was one of the handful of interviews I've ever done. And I had a lot of fun, guys. Definitely check out his channel, subscribe, like that video. Check out that video. So anyway, if I was going to simplify all of this and just go with some sort of, you know, brain dead answer where the one signal That's kind of funny because there is no one signal. But if I was going to give you the one signal, that would be the signal to rule them all. It would be the US dollar index. The Bitcoin right now is not a hedge against inflation. Look at the consumer price index. It's at the highest level since 1983. Bitcoin is just dumping. It's not an inflation hedge right now. Long term it is. What is Bitcoin right now? It's a hedge against cash. Specifically, it's a hedge against cash, not necessarily a current inflation hedge. It's not. Guys, look, it's a hedge against cash. And cash is very popular. Look at this. Bitcoin is dumping directly against the US dollar index. So Bitcoin as a hedge against cash in an era of rising interest rates, which makes cash more popular, well, that's not good for Bitcoin. So if Bitcoin is a hedge against cash, well, we're going to need to see the US dollar index top out before we can really start making these calls. Right now, it's just on the most unbelievable parabolic trajectory we've seen in decades. I mean, it's wild. So Bitcoin hedge against cash. What is this? Could be, maybe the one signal that I would say is one of the most important for Bitcoin is a US dollar index reversal on the monthly time scale. I don't know when that's going to happen. And a lot of people are looking at, like the 120 top, and they're saying, yeah, that'll be the resistance. I mean, guys, I don't even think technicals matter right now. I don't think they matter. If the Fed just says something, your chart goes out the window. So the DXY could, in theory, break above 120 and go much higher, and then have some sort of major fake out, major reversal at a much higher level when the markets are much lower and the recession has built. And then once we have a slowdown in the US dollar index, a sideways range, right, a multi-year sideways range of some kind, that's when we can get bullish again. So I'm waiting for a major monthly bearish engulfing candle on the US dollar index, monthly bearish engulfing candle, and that'll be one of my main signals. Because again, it doesn't matter if the US dollar index is going down. All that matters is that, look, it's seeing higher highs here. This was one of Bitcoin's most bullish moments. Bitcoin broke all-time highs in this range, while the US dollar index from 2015 to 2017 was seeing higher highs. But why was Bitcoin bullish if the US dollar index was seeing higher highs? It's just because it lost its momentum. The loss of momentum is the bullish signal. So the US dollar index loses momentum. Even if it's seeing higher highs, this is bullish for Bitcoin. It's lost its momentum. Cash is flowing elsewhere. And then eventually when it dumps, a major bull run ensues. So guys, lots of stuff. It's so hard for me to really explain all my thoughts, and it's so hard to know what's going to happen. And I'm not going to act like I know what's going to happen. I just don't think markets have really, I don't think the dust has settled yet. Regardless if the S&P has a volatile move up. Guys, this is the era of volatility. Yes, this can happen. We can see a massive rally and then, come lower later. Break below the 200-week later on. I'm not trying to predict the short term here, guys. And, of course, long term, these are good areas of value to accumulate. There's just downside risk, and there's just so much uncertainty, and there's so many things we don't know. And when it comes to like the Fed's expectation of like where rates are going to be, any global event can change that. Something that happens next month can change the entire outlook for the next 5 years. So everything is just unpredictable, and we're definitely not in the time where it's like it's some whimsical bull market dip, and it's just like, oh, just buy the dip. They were guys. There was like quantitative easing, money printing. It's totally different right now. So it's hard for me to really say. I just know that there's risks. Guys, we have a special limited time offer. First come, first serve. There's 94 slots left. Only 94 more people can get this deal. And this is BitGet, a new upcoming exchange. If you sign up, you get $10. First 100, first come, first serve. Deposit to get up to 100, right? A 10% refund on deposit. And the number 3 reward is get up to $4,000 in trading bonuses. If you actually trade futures, you can get up to, thousands of dollars to trade with. So I'll post the link below. This is a limited time offer, first come, first serve. It's probably going to fill up real fast. So definitely check it out if you're actually somebody that trades, whatever. And also, I just wanted to give a huge shout out to all of the Patreon members that are still here, still supporting this channel during one of the most difficult times we've seen in decades. And this next clip is for you guys. I'll see you guys soon.